Hello, everybody, and welcome back to another episode of the Impact Farming Show. Today, we have JP Gervais, Vice President and Chief Economist from Farm Credit Canada. JP, how are you?
I am very well. What about you, Tracy?
I'm doing fantastic, and I'm so very happy to have you back on the show. We have something exciting to talk about. Of course, Farm Marketer, largest farm real estate website in Canada, Land Value Report. We love to talk about this. So I heard that the 40th annual edition just came out. Do you want to talk about the report and give a little bit of context and what's included for people that might not even be aware of the report?
Yeah, thanks so much for the invite. It's great to be back on the show. And yeah, the report, I mean, there's a reason why this the 40th anniversary is because we really believe in the significance and the importance of this. So at the heart of it, basically is we believe in more information is better to make this informed decisions on your farm. So this is all about providing information. And actually, I've been involved with this for the last, I would say, 14 years. And really, at the end of the day, we've seen some evolution in terms of the amount of data that is available in the report. So you might be able to have seen, a little map with some of the average increases in land values across the country for the 10 provinces and so forth. But if you go to our website at fcc.ca/farmland values, you'll be able to dive into a lot more information. So average increase on an annual basis for a specific region within a province, not just this year, but previous years. You're going to find a range of values as well. So for any region in the country, you'll be able to dive in and say, well, not on average, but for 2023, transactions were between this much and this much. And so that gives information for producers. Obviously, farmland is a very local market. I mean, there are some underlying factors that matter all across the country, coast to coast. But the bottom line is land prices are very local in some ways as well. So I do think that the report provides a very accurate and in-depth overview of trends in the farmland market in the country.
And they can download it for free, right? Well,
Absolutely, totally free, totally accessible. Download it. You can play with it and go back to it as much as you want.
okay, fantastic. We'll include links in the show notes. Okay, now let's talk about the 2023 report and the results. Can you share your overall thoughts on what the report contains for last year?
Yeah, so the average rate of increase in land values in the country was 11.5%, a little bit lower than last year, 12.8%. So this is one thing. And so it looks a little bit lower, but I want to make sure that I'm very clear. We're talking about still increases in land values. It's
Right.
just that the rate of increases slow down a little bit at the national level. The
Okay.
way that we come up with, or how we come up with an average for the country is to actually, it's a weighted average. So a province like Saskatchewan that has 40% of all the farm acres in Canada would have a much bigger weight on the national average. And in fact, if you look at how the average of each province and how they compare to the national average of 11.5%, we have two provinces that actually have a average increase higher than the national average. Saskatchewan driving up the national increase, right? Saskatchewan's around 15% on average, and Quebec. So we do have, and so I do think that if I were to say one thing, I do think that the fact that the national average is not coming down much from last year actually is a little bit misleading, I would say, even. So in the sense that we're definitely seeing across the country a little bit of a cool off, a little bit of a slowdown in the rate of growth, right? Land values continue to go up, but it actually is a little cooling off a little bit. The fact, though, is that for a province like Saskatchewan, it is still very hot. But that's also a province compared to Alberta and Manitoba, for example, where land values on average in dollars per acre are a little bit lower. So there's a lot to unpack here, but I would want to emphasize that given the economic environment, I would have expected the national number to be a little bit lower than what we're reporting, just because interest rates, commodity prices declining, those type of things. But so we want to look beyond the number a little bit and say, all right, yeah, actually, you know what? Despite the number being really high, double-digit growth, there's a little bit of a cool off, like a cool down in the farmland market.
Okay. Okay. I think you already answered this. Anything that surprised you? You kind of mentioned that. If you want to touch on that a little bit more, go ahead. If not, the other thing I wanted to ask you, and again, you touched on 2022, but going back to 2021, the overall national trend, you
Yeah.
touched on that a little bit. Do you want to go back those 2 years?
Oh, definitely. It allows me to expand it a little bit. So first off, yeah, you're right. My surprise has been that I was expecting something that's actually and then the end result is a little bit higher than what I was expected. But full disclosure, I've been, and then people for sure, some colleagues for sure point this out to me, right? So that I've been saying this for a number of years now. Absolutely, right? I've
Yeah,
been saying
yeah,
things are going to slow down because land is so expensive, not just in dollar per acre, but
yeah,
relative to what you have to pay when you think of borrowing money, servicing debt. That's really expensive. Anyway, so we can get back to that later. So that's the one thing. Given the economic environment, lower commodity prices, high input costs, high interest rates, weather challenges, basically across the country, right? We had a really dry 2023 in the prairies, but bottom line is across the country we had different weather events that really made it challenging for producers, and that's just a coast to coast phenomena. And then so that's the one thing that surprised me a little bit, but it's been kind of a routine now. I mean, for a couple of years that I've been, or more than a couple of years that I've been a little surprised. And then second is to your point about the trend, and we've had three before this year. We've had 3 consecutive years of acceleration in the rate of increase, right? So land value is still going up, but at a slightly higher pace.
yeah.
And then now this year we're slightly lower pace. So at least, even though I'm surprised on the upside in the sense that I'm getting results that are higher than my expectation was, I do think that things are actually going to cool off a little bit. But the market is very, very strong and robust, given that there is so little supply of land available. Not just in terms of like the old saying, right? They don't make any more of it, but in terms of what is actually available in the marketplace, there's not a whole lot for sale. So it doesn't take that many bidders to push land values up.
Yeah. Okay, so I want to make sure I read through the report and make sure that I'm reading it correct because there's a lot of numbers and probably fine print, like what's compared to what. So when I read through it, every province except for BC had a growth, a positive number. BC had a negative. So I'm understanding from that the national has slowed down, still a positive, you said, but to me, touching on what you said a little bit, interest rates, higher costs, what one might think it would start to slow down where farmers, I'm a farmer, right? At some point with the cost of land and the interest, when does it cool off a little bit? But dive into that. It seems every province was a positive except for BC, right?
Yeah, so land
Okay.
values on average has gone up everywhere but BC. Now, I think that emphasis that allows me, you brought up, allows me to emphasize that we have to be extremely careful comparing across provinces
Right.
because every province or each province has their unique attributes in terms of the mix of agriculture, in terms of even if you think Alberta, Saskatchewan, we think well prairies and so forth. Yeah, but a bigger share of livestock, in a bigger relative more weight on livestock in Alberta relative to Saskatchewan. So there's just those differences. Certainly, BC is a very diverse province when it comes to land, and there's one region in BC in particular that has really, really expensive land. There are different drivers behind this, closer to urban centers and so forth. And so I think, definitely the market's cooling off in BC, absolutely 100%. But the region that is driving the negative average increase, we're seeing a really, really, really wide range of land values. And that's all available in the report if anybody is just interested in going and reading it. And really, I think we have to be careful to draw too many conclusions when looking at BC relative to other provinces. But overall, I think it's slowing down. I think we already had signs. I'm going to think of Alberta, for example, where this year I think the average increase is around 6%, and last year was around 10%. As soon as as soon as mid 2023, we're already getting signs that the market was cooling off a little bit. So it is cooling off, and it is not cooling off in Saskatchewan. But this is, in the prairies, this is where you find the land that's the least expensive. It's expensive, but it's the least
Right.
expensive. So there's just those nuances as well. Ontario, 10% seems really strong. It is strong as an average increase, but we've had 2 consecutive years of 20% growth. So that did not necessarily match up with the economic fundamentals that you referred to in terms of commodity prices, interest rates. So I do think that we are seeing fewer transactions. We're seeing cooling off a little bit. So I do expect that this is going to continue in 2024. But we have to be careful. Each of the provinces, their unique attributes and drivers that fundamentally are pushing the farmland market where it's at right now.
Okay. You pretty much answered my next question, but I just want to dive in there a little bit deeper. For 2024, you said you started seeing signs mid 2023 that's slowing down, right? Because it's always going to be a lag effect
For sure.
on our finances, on right? Everything takes a little bit of time. Um, so 2024, we're looking at interest rates that are elevated compared to years ago. We have high costs of inputs and high cost of land. We're looking at lower commodity prices in 2024. So you're expecting that land will cool off a little bit?
Yeah, I'm expecting that when we report in 2024, at the end of 2024, so a year from now, when you and I talk again, we're probably going to, I expect that we'll be looking at still a positive rate of increase for land values, but much lower than what we have right now. And you're absolutely right. There's always a lag. And the lower commodity prices that we have right now, they can be traced back to 2023, mid 2023 somehow. So that means that you're right. I mean, it's going to take some time to be reflected. Interest rates, we think our assumptions are that the Bank of Canada is going to proceed with a first rate cut in July, some say in June, summer, and then there'll be two more, but that's just 75 basis points, 0.75%. So you're right to point out that the interest rates at the end of this year are going to remain a lot more elevated than they were if you go back 3 years ago. So the bottom line is that, yes, interest rates are going to remain elevated, although we will have a little bit of relief. Commodity prices, unless we have for commodity prices to rebound, we're going to have a major supply shock somewhere. And I hope it won't be in Canada, although we're carrying some dry conditions, into the spring. We'll see how that evolves. There's still plenty of time, but nonetheless, I think it's going to be something to monitor for sure. So if we were to have lower yields, maybe, hopefully not, and then lower commodity prices, then of course that's going to have an impact on farm income and on the demand for farmland. Supply remains very tight, and that's just a critical thing. I believe you'll always have, just based off the cycle they're at, you'll always have farm operations that are at the expansion stage just because they finished paying off some debt or they're at a different point of their business life and so forth. So there will be demand, but I do think it'll be weaker than what we had in 2023. Yes.
That makes sense. Land is such a funny thing, like that saying that they say, buy land, they're not making anymore. It's so true. And I mean, around our area, our neighbor piece came up for sale. And of course, we're smart business people. You put the emotion aside, but there's almost like we need that, right? We need that. It joins our operation. If it goes, chances are it could be gone forever. So farmland is tough, right? What is that max for operations? Because sometimes there's just we need this. We need to figure out how to make it work. Let's do it. And I wonder where that cap is for people.
You raise a super good point. First off, yes, you might say, is this, I believe we are a very savvy business sector, but we optimize over many years. And to your point, if you're not buying this land now, it might be gone for a generation, not available for another generation. And that's just what it is. And then when it makes sense, closely connected or related or closely located to your operation and those things. And then businesses now, for sure, are starting to say, all right, how can we make it happen? And so one of the things that we've done as part that is not in the report, but will be on our website a little bit later, if not a little bit later, would be to look at what's the share of gross income. So not even accounting for cash expenses, your fertilizer, seeds, and so forth, but just looking at what's the share of your gross, what you gross on an acre of land that you need to allocate to service your debt, right? So make some assumptions, amortizing over some years and, 75% of the purchase being financed by term debt and so forth. That share of income that you have to allocate to servicing that debt because of high rates, because of lower commodity prices, because of some challenges with yields, has been going up. And as for most provinces is near a record high, or if it's not at record high, it's very close. So businesses are trying to make it work, right? So what do? Is you look at your operation and you look at some of the land that is paid off perhaps, and how can you use that revenue to, kind of be help, cover or help with the purchase of that other acre or that other quarter. And it's just that, yeah, businesses are aware of the fact that where most farm operations would have a very long-term view of the business and optimize not just at the margin, but like taking this long-term view where they want to take their business.
Fantastic point. I love that. Yeah, farmland's just a little bit different than other debt, right?
That's the interesting thing. It works like a commodity in a sense that it's driven by supply and demand, but it's
Yeah.
such a different type of commodity that it's so unique, such a strategic asset for any farm operation that it just works a little bit different. And even though it's still subject to the law of supply and demand, but
Hmm.
it just works a little bit different for sure.
Fantastic. Thanks for sharing your thoughts on that. Interest rates, you already mentioned come July, you think there's going to be a cut and then one or two more?
Yeah, so we're looking at maybe a top, a percent lower, maybe 0.75% lower. But the bottom line is for operations and that would have an impact right away on your line of credit, your short-term debt. The bottom line though is for farm operators to think about, well, what about my long-term debt? Do I need to lock in? When is it business savvy or business smart to actually lock in an interest rate? And I would argue that when we think of this, it's always about being forward looking. It's always about what the financial markets believe will happen in the future. And markets are not always right, but it's always about what they believe. And if you look at interest rates right now, given everybody or the consensus is that to have a rate cut in July, to have some rate cuts before the end of the year, the markets for that long-term interest rate, like I say, a 5-year mortgage, fixed rate, has already started to come down. So I think there might be a little bit more downside, like meaning like we can see those interest rates coming down a little bit more. But this is something to work with, or to think about maybe getting the support of your financial advisor, accountant, business, I'm a farm advisor to really say, all right, when do I start to have those conversations? Maybe there's an opportunity for me to lock in some rates, having the peace of mind, easier to plan for, ahead and so forth. So those are discussions that each business needs to have. So.
Oh, I'm so happy you went there. Actually, as we were talking, I wanted to ask you that because it's such an important conversation. And I think I've mentioned this to you before. Good or bad, I've always been a fan of fixed mortgages just because to me yes, you might pay more, but at some point to me, it's a type of insurance for your business. And if you're running tight margins, look where we're at now in the housing and people. I mean, we just seen our interest rate explode. That is a big risk to your business, right?
Absolutely, and you're so right to consider it as an insurance. It is what it is. That's an insurance, and we all insure everything that's precious to us. And we're not necessarily disappointed when things don't happen because we don't have to exercise that insurance. Our house doesn't burn,
Yeah.
yay! But
Yeah.
I still bought that insurance because if I had not and I was subject to an event like my house burning, then that would put the health of my financial health of my family in jeopardy, right? So I think that we need to be thinking along the same way. What's the cost of not purchasing that insurance? And it might be okay. You might be able in
Yeah.
your business to live with this and say, yeah, I don't need it. I'm in a good spot. I'm carrying a very low minimal amount of debt because that's where I'm at. And
Yeah.
that's fine. And then others would say, well, I'm at a stage where I'm highly leveraged and if interest rates and then I would like to so I'm at a stage where I'm highly leveraged and then maybe that's insurance I need. The thing about, and to your point about short-term versus long-term interest rates, for so many years you can almost go back to 1990s, the mid 90s. We've had interest rates coming down, and so in a world where interest rates are coming down roughly all the time, then it makes sense that everybody that went short term came out on top. And that's just because interest rates were coming down all the time. So yeah, you purchased insurance, and unfortunately that didn't turn out to be really, really valuable other than just a peace of mind. Well, now we're in a world where interest rates hit rock bottom in 2020 and 2021. 2022 started to go up. 23, we know what happened. And now we're at a point where we're going to see rates up and down in the future. I would say, we speak, for the next couple of years, and we'll be able to talk about rates coming down, rates moving up a little bit. And so I think that's when, you really need to assess and get some help, surround yourself with, the experts in the fields of, management, accounting, so forth, just to get the sense of like, what is the best option for your farm, right? Everybody's different, and that's unfortunate. I wish there would be like a one solution fits all or one size fits all type of solution when it comes to finances, but this just isn't. So yeah, develop the best plan that fits your tolerance to risk as well.
That'd be franchised farm operations if it was all just static quo. And I'm
Exactly.
glad you said that. And I mean, honestly, Anthony and I were in the beginning part of our farming with high debt level, right? And lower cattle prices. So we said, okay, for us, no financial advice here, but for us, we're going to lock this in. If we were towards the end of our career and retiring with no debt, then you just whatever, right?
Yeah.
Exactly like you just said. There's so many variables, but I'm glad that you went into that. Well, one more question, and it's the wizard hat again. Do you ever think we will see those low rates again, or is this the new normal?
I think we're likely to see rates stabilize a little bit lower over 10 years. Let's say you ask me where's going to be the average is going to be lower than what we have now. I don't
Okay.
expect rates to go up. Some people have mentioned, thinking of the 80s and so forth. The 80s was such a people focus on interest rate, but there are a lot of different things that happened in the 80s when you think of the farm sector. One of which was, embargoes in the 70s and lower commodity prices and so forth. So we're not there. Hey, can interest rates go up higher? Absolutely. But I would say over 10 years, I would suspect that we're going to be with an average lower than currently. But it's an average lower than currently what the Bank of Canada rate is, but the financial markets kind of walk to their own drum, or they walk on their own in a sense that they get the influence from the Bank of Canada, but they also look at all the different things that are going on in the economy. I think we're likely to see rates a little lower, but I just don't know that they'll go much lower. So we're going to have to live in an environment where, on average, rates are higher than the period of time that we experienced really not too long ago.
That's good to know because sometimes when we get used to a rate, we go, okay, it's going here. And then we're waiting for the prices to go here. Just like commodities, it reaches a one-time high and you're like, that's what we're going to get forever. But then it goes, right? It's
Yep.
just kind of human nature. So I love that you shared that. And I should put a disclaimer here. JP, Tracy, Impact Farming, and Farm Marketer and all associated entities are not giving legal advice.
And financial. I see.
Financial, yeah.
The point being that, like, think of a CEO of any business. You're a CEO, and you surround yourself with people that are able to help you. Like a CEO of any big business, he or she is not going to know it all, right? So you need, depending on the size of the business, I get it. A small farm operation is not going to be able to hire people and so forth, but you need to focus on what you do best, whether it's out in the field, the production side of things, maybe you're a marketer as well, or whatever it is that you do best, you focus on this and you gain some help, right? So like what I say is have a CEO mindset where you surround yourself with the help you need to get to the business to where you want it to be, right? So I think it just makes sense to seek the financial advice from the people you work with that knows this and do this on a regular basis.
I agree. Okay, I think that covers everything plus more than I even had. So thank you for that. Here's our final spot for parting words and where farmers can access the report, and then we are done.
Yeah, so the report's available for free at fcc.ca/farmland values. There's a big map of the entire country, and you can zoom in and out, getting all the information. And you can also print out in a PDF format a copy of the report with some commentaries for dry land, irrigated land, pasture land. There's just tons of information that I hope people will find helpful.
Wonderful. JP, I really enjoyed our time together like I always do. Thank you so much.
Always a pleasure. Thanks so much. Until next time, then.
Right on. Thank you, JP. You guys in the audience, if you enjoyed this as much as I did, like it, share it, get it out there so all farmers can tune into this episode. Thanks, guys. Bye-bye.